July 14th, 2025. Today ended up essentially being a bull trend day. Obviously, when you get small pullback bull trends, a lot of times they don't look like them until very late in the day, and then it's too late. So bars 1, 2, and 3 on the day. This was just a trap, a vacuum test of the bar 3 close on Friday, which was a reasonable area to sell if you sold the close of 3. So those traders scaling in would have imagined that they would have been able to scale in and make money. And if they scaled all the way in, and they would have been able to make money on bar 3 today. But obviously, that's a very difficult thing to do, more of an algorithmic type of thing. 4 and 5 consecutive bull bars, really strong. Odds are there'll be buyers below, scaling in lower. 6 is a big enough bar that it should get a second leg. 4 and 5 are also pretty large and should get second legs. I drew a little line below 7. I did not take the trade, but it's a bad high 1. Not a terrible high 1, but it's a high 1 and 6 needs a second leg. So if you're getting a high 1, 4 and 5 are going to get a second leg. And then you have a high 1, but 6 needs a second leg. It makes a lot of sense to buy below the high 1. If you did buy above it, you should have a wide stop and be willing to buy more below it. High 1s are swing trades, so odds are you're going to trade below it, and you should buy more when you do, because the trade is still good. 9, 10, and 11. I thought, I was looking at it as leg 2, leg 1, pullback, two-legged pullback, leg 2, and I thought we were in a bull channel, so I did not want to buy the close of 11. Instead, bought the 9 high during 12. So rather than buying this close, because I'm not trying not to buy the close of channels anymore, I bought the 9 high during 12. 12 obviously retraces more than half the bar and very strong close, so it's a surprise against me. Once I got 12, I was looking for basically a break-even exit. 13 is follow-through for 12, not that great, but I still thought 9, 10, and 11 was enough that we would at least bounce back to the bar 11 low. I was expecting us to get back to here. My half an hour exit ended up being here, but it would have been okay to hold for the 11 low. If you did hold for the 11 low and you got out on 16, I think that's reasonable as well. I personally just exited because that's what this is what my system says to do. I get a bar like 12. I'm supposed to look to get out on 14. 14 and 15 consecutive bull bars, not really all that great. I think 12 and 13 is still the dominant force. Should get a second leg. I mean, 16 ended up being the second leg. I think 17 and 18, especially 18, are surprising. We have a pullback on 19, buyers below 20 and 21. And you can see we have 4 legs up to 24. 27 through 29 is a 3-bar micro channel. However, it is, coming after a pretty parabolic move up, and trading against parabolic wedges isn't usually a great idea because there's a high probability that you're going to get a deep pullback, especially if they are not breakouts. So when you get a 3-bar micro channel like this, that's a parabolic wedge, and it's not a breakout, there's a 60% chance that you're going to get a deep pullback, meaning somewhere within a couple ticks of the 27 high or the 27 high, which was basically the way I defined it, within 2 or 3 ticks of the top of the range when I did the study. So since this did not break out below the 26 low, I thought odds were we would get a deep pullback. The way I tried to get short was I looked for the upper third, the sell zone of bar 27. So I set a limit order at the sell zone of bar 27 right there. And I was going to try and catch the symmetrical second leg. Obviously, it came 1 tick away from my limit order, did not fill it, and then went down. So my idea was right. I'm not trying to sell the close of 29. It's not a very good idea. You should at least sell the 27 low. Probably should look to sell even higher. And then 33 would be your symmetrical second leg. 38, 39, 40, 3 consecutive bull bars after 3 legs down. I thought this was a pretty credible buy. I did buy the close. This is a decently tight channel, but and it obviously starts with an inside bar with a large tail. But I thought that even if we filled the gap, odds were it would give me a chance to scale in, and this would get another leg up. I also thought the 63 close from yesterday was going to be important, so I did buy. I did not hold to the 63 close. I just ended up taking my profit at 1R, which I believe was somewhere around the close of this bar. It was somewhere up in this area. But it would have been an extra 2 or 3 points to hold to the 63 close, which I thought was a reasonable idea. And you can see we did get there on the following bar. Formed a trading range. Some people would say it's a final flag, and then we have a breakout above, so sometimes that'll fail. Uh, I did not buy the close of 61. You're trading late in a trend day. It's a late leg. Instead, I bought the 59 high. Basically, I was taking a chance that 63 would turn into a good high one and that we would get a second leg up. And then, whenever you're buying late in a trend day, you have to keep in mind a lot of, you're basically taking a chance that traders aren't going to just take profits, which does happen at the end of trend days. Bulls are looking to take profits at the end of trend days. So if you're buying up here, you do have to be careful. So that's why I did not want to buy the close and just scale in. It's not really a great idea. I instead bought the 61 high during 63. I was hoping that, 64 isn't the worst bar in the world. Sometimes you're going to go below 63 and then get the second leg. I wanted 65 to be better. That was disappointing. And 67 was also disappointing with the large tail. We didn't quite get, had 65 been a 3-bar micro channel, I could have exited. Had 67 been a bear bar, I would have exited. But I ended up waiting for 68 and getting out in this area. I did not get out on the close of 68. I gave 69 a chance, but it didn't work out. And I got out below 69 during 70. So I lost like a point or two there. That position size was bigger than either of the other position sizes. Just because I'm buying the close here, I'm willing to scale in. I was only buying here. I was not really willing to scale in. So I ended up break even on the day, which is fine. If had I gotten filled here or had this trade given me a quicker way to exit, I would have been fine on the day. And again, I just ended up break even. So it's not really a big deal. But this trade does end up being a loser, which is why you have to be careful buying late in trend days. Overall, there's only 4 signals today. It wasn't a super busy day. So the bulls are hoping it's a 2-legged correction, and then we get another leg up. I think that might be the most likely scenario, but I'm not sure. I think we're going to form a trading range in this area. The Bears might need a little bit more of a pullback than this. They might need one more leg sideways to down. Obviously, the bars are not all that large in these past couple of days. And then the weekly chart, this ended up being a bear bar, which is a reasonable buy the close bar. Not a great one, but it's reasonable to buy this close and look for another leg. Assuming that this is a fresh breakout, the bulls are trying to keep the gap open. All right, that is the